Okay, so let's go. Okay, cool. All right, so session start. We are in a downtrend. Well, we've been pumping. Look at the pump. It's just like ridiculous all the way up on the 4 hour. We've hit this level though. That 800, I've been talking about it for last week. I did talk about it. We had that 1:1. The 618 had a little bit on this little AB equals CD leg. But the big one was this 0.618 in here. I was hoping, never hope, that it would have gone, it would have done this type of thing. Maybe it will, for a double top, maybe, and then just muck around for a bit, and then turn over. Because we do have to do distribution now, okay? So all the accumulation was all the way back here. Look, I mean, it's just been going up and up and up and up, right? So there was a distribution phase in here. This is 4 hour, so long term, big wheel type of distribution. Pulled back into here. Really didn't like it. We've always got that upward bias. Up into here, that was a huge move in November. Then it had a rest, didn't do anything. Came back to this SR. In here, then it's moved up again. So we would have to think that we've got to do some distribution first, right? Short-term plays, we can nab this, just like get a little short plays, but I would think that the SR is here on the short term. Let me go down to a lower time frame. So that's that in there. Let me just put this across. Sync layout. Okay, so in there. So that lines up with all of these trend lines. And this might then just pop back to the upside. If the 200 doesn't do it, then this might, okay? Back up into here. Might be early though, might do it early. Alright. So, but anyway, I think we might get some like serious resistance up here at the 800. If it wants to do a liquidity grab, it's going to go to 18,000 and then move back. So that's the next level up here at 18k up in there. But that did work out, so we might have like a little bit of double top or divergence up in there, and then off it goes. So, alrighty. So, bit of a channel that happened in here over the US session on Friday, which was nice. I took a huge amount out of for me at least, a huge amount for me out of here. So I took that. You guys all saw the statement that I posted up. So that was a good start to the March month for me. But we can continue this out, see what happens there. Whoops, sorry about that. Whoops, what have I done? Here we go. Okay, we'll put that out there. But the trend is still up, okay? We need to slowly distribute all of this. This is so bullish that it needs to slowly move over. We may now, Ryan, we may get our Wyckoff out of the 4 hour, okay? Let's just keep that in the back of our minds at least. Your turn to talk, Ryan.
Yeah, I think time is just this is going to distribute. It's going to take a while.
Yeah, well, I mean, look at this one, the last one here,
Amer-
this one in here.
Yeah.
This took, what, 24th of Jan all the way over to the 24th of Feb, 1 month. Oh, sorry, idiot. 25th to the 14th. So close to a month, 3 weeks for that to do it. Okay. But look at that 1:1. That was almost to the dot. But that 1618 didn't quite trigger, but this wider one did. 618 did. Alright. Alright, let's just wait for open. News. Let's have a look at news. $7 we've got some news coming out. Anything serious? The PMI figures push gold pretty aggressively to the upside on Friday. If anybody was playing gold, I was lucky enough to get out of my short gold before it went crazy long. It's now all the way up at there's a resistance point up there. I've sold gold at 2088 if you're watching SRX. Yep, not much really going on for the rest of the night other than this Spanish employment. So I'm not sure how crazy today will be. We've got Lorentz right now, the Loz play. If Aaron is in the room, Loz play is in play. Right there. Because that's actually not bad because you're meeting up the underside of the 200. No, not the 200, the 500. Yep. But it's still bullish. We're still bullish. The steepness of this trend to the upside. Any pullback, you just keep buying it, basically. And we discovered that all last week, didn't we? Any short players last week were just getting eaten alive. It was only until Friday that you really had a chance to have a decent sell. But 1 week is always different to the next. All right, 3 minutes to go, 2 minutes to go. And what I'll talk about later, when we've got another moment, I'll do some double top, double bottom theory, basically, and my opinion on it. And Daniel Vu wants me to talk about it, which is great. Okay, we're open. Let's touch of the VWAP. If anybody, where's Pete? Is Pete in the room? Oh, Pete's gone MIA. Okay, so I've shorted off the VWAP, guys. I've shorted right there. And I'm just literally just about to bring my stop to BE. So I'm short there. I'll let this thing have another bit of a go. Because on that, okay, so it's two arguments on it, right? You've got SR in there. You got VWAP. You got the 200 on the 5-minute chart. You got a couple of roadblocks in here. So I shorted up here for a small loss. Possible gain down into the 713, 715 level. We are on open though, so you can whip around and just be a complete prick to me. So, but anyway, let's see what happens. Short off the VWAP and the 200. Be nice today if we get on the 15-minute chart. I mean, since Thursday, what is it? Wednesday even. Wednesday last week, 21st of Feb, this thing has not, on the 15-minute chart I'm talking about, this thing has not looked below the 200 period moving average except for here, just briefly, on Tuesday. So hang on, Wednesday. So Wednesday, not last week, the week before. Wednesday, Thursday, Friday, the week before. It hasn't had a look underneath the 200 period moving average. Seriously, looked underneath it, right? So, we're due for it. We're due for the pullback, I reckon. Not before, it gives us grief first, right? It's going to really take its time because there's so many longs still in here. All the other traders are still thinking long, right? Because it's so bullish, the steepness of that trend to the upside. Bull territory. Anyway, I'm only looking for like a little bit out of that. If I can get it, great. That'll be 30 points and then that'll be pretty good. If I don't get it, I've got a tiny little loss and then I'll have another go later. So I'm in here, looking for here, 30 points. My stop is, there, about 7 or 8 points. So that ends up being about 3-1. 3 hours good for me, mate. Well, we've closed the 5-minute candle with a wick, which is great. Mind you, it is still open, so that can lie to you. I just gotta get all the fund managers to get out of the way first, and then get all the technical traders in. All the end of day traders, basically. So just reviewing this, what I've just seen, right, is that we've got the 200 period moving average right here. Okay, so I might adjust my target to maybe just to this low, basically, or just underneath the low. Because that's in my way. 200 MA is in my way. And that's the 20 level, okay? Everybody who's trading with me understands what the 20 and the 80 means. It's the insto levels that wants to, if we're going to overrun. So let's see what happens there. Remembering it is still a Monday and there's no real news going on. There's also no real reason why any of the longer term longs will be pulling their positions at this point in time. So if we go back down here to this 4-hour chart, we've got, even if we pull a fib on it, okay, let's do this last leg fib, okay, there's no real reason why there'd be any panic until you come down to 17,600, 17.6. So big guys, all the really massive guys will probably be having their stops in around here, 17.6 to 17.5. But what they will want to see is like a serious distribution of some sort, right? Because there was an attempt here, but that came down as to 618 of this double top in there, and that was a buy zone. But honestly, are we worth 19,000 perhaps? 18,750 would probably be your next sell zone. Let's see whether I can get there. But there's certainly confidence in the markets, that's for sure, especially the DAX. We did discuss on Friday and Thursday, I think it was Thursday, not Friday, sorry, that, you know, ES had a bit of a pullback, but now it's, you know, still jumping. We're hitting the top, let's go here, ES, we're back at the top of that channel. If anybody agrees with my channel drawing, we're back at the top of this one. So that's potentially going to be a sell signal as well. Let's do that. And let's do this. So that's a big sell zone in here. 4 hour. The FTSE is just nothing. Look at that. It's just absolutely nothing going on there. So FTSE is not something to be, there's definitely not a trend in that on the 4 hour. But ES is definitely up. Let's see whether we can get a little bit more of a pullback on the DAX. I think price is very scared to come into this 200. That's what it is. Anyway, I've got my stop just in front of it. So let's see whether we can get it or not. 20 points. It's not big. We're already down there, so I'm going to bring my stop to BE. I could have waited for a little bit longer, but my stops at now at BE, guys. In there. So if I get stopped, it's just a free trade down. Because if this is going to run, it should be doing it now. If we do cycle theory on this. Where's my cycles? Here. Let's go from this low to this one. Oh, we've still got a little bit of time to go. You could argue that that's a low in there. Maybe I should go back here and do that as a low. So kind of, that's not really correct. That's why I don't like cycle theory. You can misinterpret it. What's the difference between OX? OX is 50, 31. Wow. That's now 19 points. That's huge. Huge difference. So if we go back to our old school AB equals CD, so that's that to there. So the 618 is right at the bottom, so this might turn into a double bottom. If it does break, the next stop will be at that 100 level. Right there. See, but it certainly doesn't look like it knows what it wants to do. Pretty bullish. That's a bullish candle, so it looks like this might be over. That's 1 minute though. Let me get rid of this because it's annoying me. Typical of an open though. Look at that. It's just like, just a huge battle zone all the way through. There's no direction yet. So just, don't panic. We've got all night. But Lorenz is short. Is Aaron in here? No, Aaron's not here. Tom M. Welcome, man. Not sure I know you, but all these other guys know me pretty well. So I'm still short. I've got my stop at break even, and I'm looking for just below this low in here. Let's see whether this can break now. If that breaks, then we're good. We're good to go. That's a 618 touch. There'll be heaps of buyers right there at that 618, which is also the low. May turn over, but you need some way more sellers to get this through there and just kill. If we get down here, all of these buyers that are at the 618, they'll have their stops around here, and this will just run straight into the 1:1. So I've got my profit target. My target's come out now. But I wouldn't be surprised if this now moves all the way into the 1, or even back even a little bit further, maybe, okay? But I'm out, so I've got 22 points out of that. 22 points. Add that to the bucket. Is about $1,300 US. Let's see if this closes below here, but I mean doesn't look well. We've got 3 minutes, but this now looks like that was the fake liquidity grab, and it may turn over. It depends on how it closes, right? We've still got 3 minutes to go though. Relax. Should all relax. But remember, over here on the 15-minute chart, look at the 15-minute. We're at that 200. So that is a buy zone right there. Okay? Don't forget, that is a buy. That's why everyone's buying it. So this might be the call for this now, just out of theory, okay, for this now to go from this 200 and make a double top, or just make a divergence of some sort and then start moving down like that, okay? Food for thought. All right, let me talk about something while you guys are watching your charts, okay? Oh, where are we? Do I have VU in here? No. Okay, I'm going to make a chart. I'm going to talk about double tops, double bottoms. Okay. Okay. Right. So typically we have what impulsive Elliott wave. Okay. 1, 2, 3, 4, 5. Then we will typically we'll have A, B, C retracement. Okay, and I'm digressing a little bit here. But then we've got that C point will usually come down to that 382. Okay. Now, what we're really looking at is there's 3 different techniques that we want to look at. Okay, so there's Elliott wave, there's Wyckoff, and then there's classic patterns. Whoops. Classic patterns, okay? They've all got a relationship of some sort, okay? Now, when we've got Elliott wave, it moves up. Then we've got a pullback, okay? Usually to the SR, this SR level in here. Then this ABC corrective move, it can either do one, it goes to the 5618 or 786 of this move to the downside. Okay, so let me put this in here, in there. Okay, so I'll leave a retrace. You should usually be 786 or 618 type of move, right? Or we'll come back to this area here in there, okay, which is that SR. And that SR will typically maybe be like an old school SR of some sort on a wider time frame, or one where it is a full number, okay? Let's call it, well, it's kind of, that's coincidental, okay? 18,100 in this case, okay? It's quite serendipitous, right? But then also we can get a liquidity grab. So then up in this zone up in here, there will be a grab for all of the liquidity, okay? And usually big banks will they'll start really piling in because they know that that's the cheapest price that they can get for the risk that's already on the table, okay? That's what liquidity grab means, okay? So when it gets up there, then that turn, for me, okay, some people call it differently, okay, and this is what I was talking to Vu about the other day. For me, that there is not a double top. This here is, whoops, let me just redo that. This here is divergence, okay, because you're making a higher high, okay, and typically on your RSI, it's not clear here, that will make a lower low, okay, on your RSI, MACD, whatever oscillator you want to use. I prefer the RSI because the RSI, for me, out of the billion years I've been watching charts, RSI has kind of been the one that looks the best, okay? I mean, I've used MACD, I've used ADX, I've used all of these different oscillators, but for me, the one that I prefer and I've always just stuck with is the RSI. So if our second top, okay, is between the 886, which is the next fib level, and the 1112 or 1.112, I'm calling that a double top, okay? From the 886 of this leg here, this leg from the 886, so let me put it in, because what I've got in there, 1272, and I'm going to put in here, I'm going to put in 112, okay? We'll make this one really bright, disgusting color, orange. Let's make it orange, okay? You can see it in there. So if it's in between, whoops, let me do this as well. Let me put in here another one. I'll put it 0.886, which is the next fib level, okay? Okay. And we'll make, let's make that black so we can see it, okay? So there's the 886 in there. Let me zoom in. There's the 886. There's the 886. If it's in between the 886 and the 1112, then I'll call it a double top, okay? If it's any bigger, then I'll call it divergence. If it's any shorter, then I'll be really thinking that it's a retrace to the 786. Okay, so it's just a deep retrace. Okay, so that's my definition of a double top. Anywhere in between the 882 and the 1112. Okay, of this leg to the downside, that AB leg to the downside. Okay. Either way you want to do it, we've just got to remember that we've extended ourselves on a trend to the upside, and now we're rolling over. And I saw that image the other day from the article that Vu put up, and I loved it. I thought it was awesome. That we've got to think of it as a circle, yeah, that it's rolling over, okay? So we're rolling over, yep. And then on the wider time frame, okay, so let's just say that that's a 5 minute, On our 15-minute, it'll be a bigger roll of some sort. The roll will be out here. Yep. Okay. And then it kind of rolls slowly. Okay. Because this is a distribution phase as far as Wyckoff's concerned. Okay. So therefore, what we have to do is, okay, if this trend here, let's say that this, I've drawn it really basically on a 45-degree angle, but if this trend is vertical, like what we've been seeing on the DAX recently, that if we get a double top, let me get rid of everything here and let me redo it. Just be patient with me, guys. Let me get rid of all of that. Let's say that we've got a vertical like this, and it's like this, and then we get a double top like that. Okay. So we've got 1, 2, 3, 4, 5, same sort of thing. We may get divergence. Let's say we got a double top. But the steepness of this, as far as volatility goes, if we measure our double top to being in here, that 1:1 makes sense because we've got an SR in there as well. But because we're so steep, there's buyers everywhere, right? And we remember that if we've got a steepness in a trend, that we're really going to have a really shallow retracement. So therefore, you would only think that we're going to get it to the 618 and then it's going to have another go, because we've got to work with these circles. Where's my circles? Where do my circles go? Where did I put my circle? Here we go, circle. Okay, because this circle here is not going to be on the 5-minute. The circle for the 15 or 1 hour or something is going to be out here, isn't it? The center of that circle is going to be here. And then what it wants to do is keep going until it distributes all of its wealth, right? And then it falls over. Does that make sense? Guys, did I make sense?
Yeah, mate. Makes plenty of sense.
Okay. All right, so that's my take on double tops and double bottoms. When you're in a super steep trend, if you got a little double top, it's not going to pull back as far as you think it's going to do. The biggest, like I've taught 300-400 guys now, right? And I seem to get the same problem every time. Yep. Is that when they soon as they see a double top, they completely forget about everything else that's going on. Yep. As soon as they see that double top, they go like that. Oh, fuck, there's a double top, right? And then they think to themselves, this thing's going to go straight back down to where it was. It will never do that, okay? And if it does, it's a freak event, okay? So if you've got steepness and you see the reversal, be super careful. Unless you're already on the wider time frame, you're already there, okay? So reiterating, right? This is why we need to start looking for this distribution type phase on our 4 hour, okay? So that's why I'm saying there's buying all on this 4 hour here. There's buying down here, right? Until we get let's do our circle. The circle's here, right? Center that circle's there. So it's going to do this before it moves. Does that make sense? And if I put that same circle, let's do the same circle on the... So I've just gone and put that across all of the charts. Look at the size of it now on the 15. Look at the size of it now on the 5. Look at it on the 5. Look how big it is. Does that make sense? So that looks kind of normal there, but it's like fucking massive on the 5-minute chart. Now it could be, you know, is it going to get up to 18, 18.3, 18.4? Maybe, maybe not, right? Maybe I've overcooked this a little bit. So let's move it down into here. Okay, but it's still got some distribution to go on the bigger time frame, doesn't it? That concept, I like that concept a lot because it gives you perspective. Okay, any questions?
Hello, guys, can you hear me?
Yes, I can hear you. Who we got?
Hi, yeah. I got a question on this. Is that how do you line the circles?
Well, that's the thing. It's, you know, it's a concept. It's a concept rather than something specific. Okay. All right.
Right. So it's like trial and error kind of thing.
Well, it's not trial and error. I'm not telling you that this is a strategy. It's just the way how it's a framework for the way that you might want to start thinking. Okay. Because the problem that I've got is like a lot of guys will look at the 5-minute or 1-minute chart, and they're just they've got blinkers on. The horses, when the horses run down the racetrack, and they've got blinkers on and they can't see anything other than what's in front of them. Right? They can't see anything on either side. This is why I'm like a. Somebody came up to me the other day and said, "Oh, I trade off my phone and I lost all my money. Why am I losing money?" And I go, mate, because you're trading off your phone, right? We've got the 4-hour, we've got the 15-minute, we've got the 5-minute. Some guys go down the 1-minute. Vu, I know, goes down to the 10-second, right? But I know that Vu, everybody, Grogs, all of my big traders, they look at the whole picture, not just in here, right? Because if I was just looking at this 5-minute chart, there was no way that I know that there's serious SR in here, okay, on the 15, okay? So on these circles that I'm talking about, that I've been talking about, it's just a concept that, there is a distribution phase. And when we've got a double top, double bottom on a 5-minute or a 1-minute, the trend is steep, then it's not necessarily going to do a full reversal. Okay, it's going to have a small pullback.
Circles add context.
Correct.
Yep, I got it. Thank you.
No problem. Anybody else? I explained myself pretty well then. Anyway, so that's my take. Let me just do one more little nuance that I have this fascination over. Let's do a double top. Okay, so we're already up there. And we've got, the theory is, this. I should have done this first, okay? So this is the actual basic theory of it. There's your double top within the measurements that I spoke about before. There's your neckline. And when we actually penetrate this neckline, okay, typically we'll firstly hit the 618 and then it will pull back, okay? And this distribution may not be over yet. So then if we've got it, we take a fib of this last leg, okay? This will either go to the neckline, 382, perfect, hit 382. But most of the time, and this is where you get your best risk to reward, is that it'll hit either 618 or the 786 a move over, okay? So some players may play it from this 382 and look for their number 1 is to 1 with their stop above the high, okay, last fractal high. Then what can be done is that you have, if this does come up to the 786, have another punch at it, okay? Add to your position and go for it again, because this risk to, look at the two risk to rewards. The first one's 0.86, or should be 1:1, basically. It should be. But what we want to do is we want to run our target just inside the 1:1 to make sure that we get out. So it's going to be less, okay? So 0.85, 0.9, something like that. But look at the second position here. It's almost 4:1, okay? Because we're patient enough to wait for this, the 786. Now I've done that on gold right now, okay? I've put a position right very deep up, and I've got the best risk to reward for it, okay? So just food for thought. And then if it does turn over, then you can pull this position off, okay, the first one, and then move your target into the 618 or close to the 618. I always front run the target so that we make sure that we get out, okay? So then that turns into a 5-1. Okay, so just be aware that when a double top does happen, it can run all very deep, all the way up. So if you've got your stop, if you've come in here and you've got your stop sitting at the 618, or just somewhere here, you can get stopped for it only just to keep going in the direction that you originally intended. Okay, food for thought. Any questions about that?
Can I just add to that, Richard?
Yeah, sure. Go ahead.
So what I've found during my experience, and obviously I use Elliott wave theory quite heavily, if the second peak of the double top doesn't equal or exceed slightly the first top, if that's lower by any amount,
Mm-hmm.
that to me becomes an ABC corrective.
Mm-hmm.
And so with that picture that you've got there, I've found through my own experience, it'll hit the 618 like it's got shown there,
Mm-hmm.
and that'll be the ABC corrective, and it'll turn and continue to the upside.
Okay.
Because what I've found with Elliott wave, if the second peak is wave 5, if that's wave 5 and not the first one, then the chances of it retracing to the neckline or the 618, 786, etc. and continuing is much, much higher than if the second peak is at any level below the initial peak.
Okay.
Make good sense?
Yep.
Because you know that I hate double tops, and this is what I've figured out over the last couple of years of why. Because I was exactly what you were saying before. I'd see a double top and it's like, oh, there it is, that's a trading opportunity, I'll take it. Regardless of how level the peaks were, you know what I mean? And then going through my stats, if the